We're diving deep into an altcoin that's caught my eye, Kaspa. It's already jumping, but what if I told you the charts are screaming more upside? We're going to dissect the fascinating technical patterns suggesting Kaspa is ready for its next big move. Let's get straight to the analysis. You've probably noticed the market's got some pep in its step again. After a slight pullback last week, we're seeing green across the board. Ethereum, our trusty altcoin leader, just reclaimed $2,600, climbing over 5% today alone after hitting a low of $2,471 on Sunday. That's a strong recovery signal for the broader altcoin market. And right on cue, we're seeing strong movements in other alts. Kaspa is a prime example. It surged over 6% in the last 24 hours, clawing back some of its recent weekly losses. But here's the kicker. This isn't just a dead cat bounce. The charts are showing us something much more significant. Let's get technical, because this is where it gets exciting for Kaspa holders and potential new entrants. Zooming into the 4-hour chart, we're seeing not one but two powerful bullish formations. First up, the broadening wedge. Imagine a megaphone shape on the chart where the price swings are getting wider over time, creating diverging trend lanes. While some wedges can be bearish, a broadening wedge that forms after a downtrend or consolidation, especially when coupled with other bullish signals, often indicates increasing volatility and a strong potential for a reversal to the upside. It means the price is coiling, building energy, and we're seeing increasing participation from both buyers and sellers, but the overall structure suggests a push higher. Kaspa has been forming this pattern, hinting at a potential breakout. Now, for the second, more intricate pattern, the Bullish Butterfly Harmonic Pattern. This is a more advanced technical analysis tool, but it's incredibly powerful when identified correctly. A bullish butterfly pattern is a reversal pattern that typically appears at the end of a downtrend, signaling a potential upward movement. It has specific Fibonacci ratios for its different legs, XA, AB, BC, CD. The key here is the D point. In Kaspa's case, we saw a clear bounce from point D at around 79/100ths of a cent. This bounce is acting as a crucial reversal signal, marking the potential completion of the pattern. This bounce has kicked off the final CD leg, and the target for this leg is currently around $0.09961. That's over 11% upside from Kaspa's current price of roughly $0.08942. What makes this target even more significant is that it aligns almost perfectly with the 0.618 Fibonacci extension of the DA leg. In harmonic trading, this 0.618 level is often considered the ideal reversal zone, a magnet for price. Here's where the analysis gets even stronger. Confluence. The $0.09961 target from the bullish butterfly pattern isn't just an isolated number. It also perfectly aligns with the upper resistance line of that broadening wedge we just discussed. This dual confirmation from two separate powerful technical patterns significantly increases the probability of a breakout. When multiple bullish signals align at the same price level, it creates a very strong magnet for price action. It tells us that this isn't just a random rally, there's significant technical structure supporting a sustained upward move. So, what does this all mean for Kaspa in the short to medium term? If Kaspa can maintain this bullish momentum and successfully push through that critical 99/100ths of a cent region, it could trigger a significant breakout rally. This level acts as both the target of the butterfly pattern and a major resistance of the broadening wedge. A clean breakout here, ideally with strong volume, would likely draw in a fresh wave of technical traders and new buyers. Once that happens, the stage is set for a larger trend continuation. My analysis suggests that a sustained move above 99/100ths of a cent could very well lead Kaspa to the 12 to 13 cent zone. This would represent a substantial gain from current levels and a strong indication of Kaspa entering a more sustained bullish phase. While we're heavily focused on the technicals today, it's always important to remember that Kaspa isn't just a pretty chart. Kaspa is a fascinating project with strong fundamentals. Now before you go all in, remember this is crypto, nothing is guaranteed. While the patterns look incredibly bullish, we must always consider the risks. The crypto market is inherently volatile. A sudden shift in broader market sentiment or a significant Bitcoin correction could impact Kaspa. Technical patterns are not foolproof. If Kaspa fails to break above $0 and 0.9961, and instead breaks below its recent bounce point of $0 and 0.7980, the bullish thesis for these patterns would be invalidated. So when we're looking for a genuine breakout, it's crucial to see strong buying volume that accompanies the price move above the resistance level. Low volume breakouts can often be just fakeouts, and that's something we definitely want to avoid. Keep a close eye on these levels. The $0.07980 level is a key support to watch. As long as Kaspa holds above that, the bullish structure remains intact. There you have it, my analysis on Kaspa, and why these emerging patterns suggest a significant upside move could be on the horizon. The broadening wedge and the bullish butterfly harmonic pattern, coupled with that critical Fibonacci confluence, paint a very compelling picture. I am not a financial advisor. All content on this channel is for informational and educational purposes only, and should not be considered financial advice. Investing in cryptocurrencies is highly speculative and involves a substantial risk of loss. Always do your own research and consult with a qualified financial professional before making any investment decisions. If you found this breakdown valuable, smash that like button, subscribe to Zacchy Crypto Update for more insights, and hit the notification bell so you don't miss our next deep dive. What are your thoughts on Kaspa? Do you see it hitting those targets? Let me know in the comments below. Until next time, stay safe, stay smart, and keep those charts locked in.